AG, I want to buy a house. They keep saying credit score. What does it mean? What credit score do I need to buy a house? We're going to talk about that in a minute. Hey there, this is a KG. I'm a realtor with Fairfax Realty in Greenbelt, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, or move out of this area into this area, contact us. We'll take care of you. We also upload videos weekly on what is going in the market region. Please subscribe to the channel so that you get updates once we upload a new video. And please share the video with others so that they can get this information. So we're talking about credit score today. What does it mean? What do you need to have as a credit score to be able to buy a house? Well, let me share with you what lenders use and how they see you depending on what your credit score is. I'm going to share my screen. All right. So, credit score determines a lot of things that you do in the USA. Your credit score determines the interest rate you get on your credit cards. Your credit score determines the interest rate you get when you're buying a car. It determines what you get when you get a loan for a house. It determines how much they're going to charge you for car insurance. And some jobs also require that you have good credit score. So it is very, very important you have good credit score. So let's just break it down what it means. What are we looking at? So the credit score can range from 250 to 800, right? So if your credit score is between 250 and 579, lenders see you as risky. You're a risk for them. There's a likelihood that you're not going to pay the rent, whatever they loan you. There's a likelihood you're not going to pay it back. If your credit score is between 580 and 669, you're a little bit less risky, but just fear that, okay, there's a probability that you're still not going to pay it, but they're still leery about you. If your credit score is between 670 and 739, that's good. They see you as a good risk. You're less risky to lenders. They know based on the score that you take care of your business, you take care of responsibility, and you're going to pay whatever they loan you back. If your credit score is 740 to 799, very good. It's very, very good. I love that. 800 to 900, exceptionally good. So in the mortgage world, in the credit card, when we're talking about getting a loan or what interest you're going to get, when you are down here in 250 to 579, because you are a very high risk person, first of all, on this range for mortgage, nobody's going to give you mortgage just like that. If you're in this range, it's very, very risky unless you have substantial amounts of money down. If you have 30 to 40% down, then you will get a loan on the mortgage loan. But if not, it's going to be very, very hard to get a mortgage loan with low down payment at this range at 579. You can get a car loan. I mean, you can get a car loan at any score, but the thing is, you're going to pay the highest interest rate. So, but we're talking about mortgage now. If you're here, 580 to 669 is fair. You will get a mortgage, but because of COVID and because of what is going on, a lot of lenders want you to be at 640. So you're still here. They still see you as fair. You will get a mortgage at this in this range. Definitely, if you get a mortgage here, you'll get a mortgage here and here and here. But the difference is in this interest rate that you get. When you're here, you're not getting the best interest rates. I mean, because they're still seeing you as fair, 640. I mean, it's not a bad credit score, but it can be good, right? It can be good when you go up to 670. So over here, you can still qualify 580 to 669, you can still qualify for FHA loan. You can qualify for some conventional loan. Your interest rate is going to be a little bit higher than somebody that is here. So yeah, when you're at 640 and above, you can get a mortgage. This place, of course, you can get a mortgage over here. There's really not a substantial difference in your interest rate when you're at 740 to 800. There's really not a substantial difference in the interest rate. The difference is usually between here 580 to 670. So whatever you do, you really want to improve your score so that you can be able to qualify for a mortgage. So how do you improve your score? Let's look at this. These are what decide your credit score. These are the deciding factors for your credit score per FICO, which is what is used in the United States. So the amount you owe is 30% of your score. They do not want you to owe a lot on your, to use a lot of your credit. So if you have a $1,000 credit line for your credit card, you really want to make sure you're under 30% of that. Your payment history, how long your payment history, how strong your payment history is 35, which is a substantial amount, 35% of your credit score. So that means it's very, very important to keep your credit history very strong. That means you pay everything on time. You don't want any late payments, even if you're making minimum, which is not advisable. But if you're making the minimum payments, you really want to make sure you pay it on time. Don't allow late fees, which will cost you money with late fee, but don't allow late fee to come into your credit, because that will really affect your credit score. The other one is the length of credit history. How long you've owned a credit, right? If you buy a car, if you have the car for 4 years, or if you have a credit card, the longer you've had a credit, the better for you. So that's why it's always said, don't close your credit card because if you close a credit card, which if that credit card is one of your oldest credit card, is going to drop your rate, it's going to drop your score. So do not close your credit card. The new credit open, sometimes you don't have any credit card, we always advise you to go and get a new credit card. So go and get it. When you get a new credit, it can actually boost your credit score. Type of credit. So this should be a mixture of type of credit. If you have car loan, or you have a credit card, or then you have student loan, the mixture of it also have impact on your credit score. That being said, you really want to focus. If you want to increase your credit score, you want to focus on your payment history, as well as reducing the amount of you owe on your credit card, so that your utilization is down. So that is the bottom line of credit score. Like I said, if you are at 580, you can get a mortgage, right? You will pay a higher interest rate. If you do not want to pay a higher interest rate, work to increase your credit score. And this you can do, it's a little thing that you can do. Once you do it, you'll see movement on your credit score, and then you'll be able to qualify for a mortgage, get a good rate. All right. So if you're looking to buy, sell, or move into this area, or move out of this area, Maryland, DC, and Virginia, contact me below. Don't forget, subscribe to the channel, and please share the channel with your friends and family. Hope to see you soon. Ciao.